What if I told you I was giving away money? What's up guys, my name is Brandon. Let's begin. So in today's video we're going to be talking about how to properly trail your stop loss. Personally, I don't use take profit levels, and I'll give you my reason for that very shortly. As a trader, your job is to minimize your risk but maximize your reward. What if I told you I was giving away money? I told you to come to the beach and bring something to hold money in. As much as you can carry, that's how much you can take. Some people might bring a cup, some people might bring a mug, some a bag, a wheelbarrow, a wagon. Do you realize if you were to bring a small vessel to carry your money, you'll be limiting yourself to the size of that vessel? I don't know about you, but I would be bringing one of those oil tankers, because what I want to make sure is that I am going to take as much money as possible. Most traders approach the market with a fixed concept of a risk to reward ratio. In my opinion, this is what a lot of traders do, and it's a mistake. They go into the market with the idea of achieving 1 to 2 or 1 to 3. Some traders even want to risk more than they stand to gain. So they have inverse risk to reward ratios. They might have 3 to 1 or 2 to 1. But that's a topic for a different day. What I personally do is I don't ever have a fixed take profit, but rather I try to focus on making as much profit as I can by using the technique I'm going to show you just now. The technique that I use is a manual trailing stop loss. And some of you may even know of a manual trailing stop loss. But I'm willing to bet that you don't or have not had much success with a manual trailing stop loss. To explain this concept, I'm going to paint a little picture for you. So let's say that you are a hunter. You go into the forest or into the woods and you want to hunt a deer. You have your gun, you have your eyes and your sights set on this deer. If the deer notices you, what do you think the deer is going to do? The deer is going to run because you are a threat to the deer. What any good hunter does is they trail their subject, they trail their target. And you know how they do it? It's actually very, very simple. If the deer moves, they move. If the deer stops, they stop. If the deer runs, they run after it. You must follow the same trajectory. If the market moves, you move. If the market stops, you stop. If the market runs, you run. What a lot of people don't understand is when the market is moving, you must trail your stop loss in a fashion that is synonymous or that aligns with the speed or the movement of the market. Because if you do not and you trail your stop loss too quickly, you run the risk of being taken out prematurely. And if you trail your stop loss too slowly, you run the risk of the market coming back and taking you out at profit that you weren't necessarily satisfied with. What this means for you is you must actively pay attention to the speed that the market is moving at, and you trail your stop loss in accordance with that speed. So let's hop into my computer now and let me show you how you can use this in a live market setting as opposed to using set take profit levels or risk to reward ratios. Alright, so we're in my computer now. Let's take a look at how to effectively trail your stop loss manually. So let us assume for whatever reason, you decided to take a sell on AUD card right in this general vicinity. Right in this general vicinity here. Right? You use my system, you use the ECR system to enter, and the trade decided, you know what, it's going to give you profit, it's going to go into profit, and everything is hunky-dory. Everything is going very, very well. That being said, you will realize that at some point, AUD card decides to come down to an area and it decides to come back against you. You don't want to run the risk of losing any profit, so you decide to trade your stop loss. Now, what a lot of people will do is as soon as the trade goes into profit, and let me use the replay function for this, but as soon as the trade goes into any meaningful level of profit, right? Let me go back just a little bit more, right? Say something like that, they automatically decide that they wish to put their stop loss to break even. And this is a mistake because remember we said we move when the market moves. We stop when the market stops. We run when the market runs. At this point in time of your trade, the question you have to ask yourself is the market really moving? Has it really decided on a direction? At this point, the market barely decided that it hasn't even gone 10 pips yet. So it would be very, very presumptuous of you to assume that the market isn't going to come back. So what happens is people decide that they're going to put their stop loss to break even right here. And then this happens. The market sometimes comes back and takes them out. The problem with this is there is money to be made. The money is on the table, but you're so anxious and you're so, for want of a better word, you're so afraid of losing money that, you want to secure any little meaningful money that you get. What you must consider is if your analysis was right in the first place, don't be afraid. Let the market do what it has to do. Let the market breathe. Let the dare run. When the dare runs, then you run. So what I would have done is, in the case where I'm using my moving averages, what I would do is trail my moving averages. And if you're not using moving averages, you can trail higher highs in this case because we know that the market is going to drop. So let's pay attention to what that looks like. So the market decides to drop. You can use higher highs in this case, right? And let's explore what that means. We can say that right here, not higher highs, sorry, my bad, lower highs. You can say right here is a lower high. And you could also say right here is a lower high. You can trail these two things. You can say that I'm going to take my stop loss that is no longer 10 pips at a loss. You can take your stop loss and put it right above this lower high. And you can keep doing that indefinitely if you don't use moving averages. And if you do use moving averages, the slower moving average that you use, if you use them, you can trail that instead. So you can say, my bad, you can say, you're going to take your line, which is your stop loss, and put your stop loss right here, which is right behind the 50 moving average. And you just keep trailing it as it goes down. Watch the difference. It keeps dropping. And as it keeps dropping, I'm going to keep moving my stop loss further and further and further into profit until I can no longer do that, until it takes me out. Now, I might not be able to stay in the position indefinitely, but I can tell you, I would not be taken out prematurely. And I am simultaneously securing more and more and more profit as the trade drops. What is important to note here is you can do the same thing with the lower highs. You can put your stop loss here, you can put your stop loss here, you can put your stop loss here. It's slightly more dangerous to use just the candles because if you put your stop loss right here, and let me show you what that would look like, the chance of you being taken out is actually a lot higher as opposed to if you were to use the moving average, right? But in this case, it actually worked out. So let's just remove this and we keep trailing the moving average. We're going to keep doing that. Right. So let's watch this here now. So in a case like this, where price has slowed down, it's no longer dropping really aggressive. It starts to consolidate here. You can even put all of this price action in a little box. I am going to cease moving my stop loss down any further because I want to pay attention to what the market is going to do. And then it starts to drop again. Now it has created a lower high, lower high, lower high. I'm going to continue to trail. And I'm going to keep doing this until I am no longer able to stay in the position. So it went down and now it's coming back. I'm going to leave my stop loss right where it is because of not necessarily fair, but I want to see if I can stay in the position for as long as possible. So let's see. Now it's pushing down again. I'm going to take my stop loss and move it down again. And now I'm going to leave my stop loss right where it is because it has now created a triple bottom. It could be a support. It could be all kinds of different things. It could be the EMAs could be crossing back up to now present the opportunity for buys. So many different things could be happening. So what I'm going to do is leave my stop loss right there. And then boom, that's where I'm taking out in profit. Watch the difference. If you were to take this trade and put your stop loss to break even way too soon, you run the risk of being taken out prematurely, as opposed to taking home by trailing your stop loss almost 120 pips. Almost 120 pips effortlessly. If you were to risk 1% on this trade would give you back 12%. And that is by doing it the correct way, by trailing your stop loss the correct way. You run when the market runs. You stop when the market stops. This allows you to not be taken out of the trade prematurely. And this allows you to maximize the amount of profit you can make, as opposed to having a set take profit of 20 pips, 30 pips, or a set risk to reward of 1 to 2, 1 to 3. You will find that a lot of the times you are going to make 1 to 2, 1 to 3 on a daily basis. Your goal is not necessarily to make 1 to 2 or 1 to 3, but it's to maximize the amount that you stand to make. Because in doing that, that is where your growth comes from. That is how small accounts grow, and that is how people continue to make profit in this space. So I hope that this made sense. And yeah, and that's essentially how you do it. That's how you trail a stop loss effectively so that you can achieve the highest potential risk to reward ratio. Because in doing this, you are maximizing the amount of profit you stand to gain, as opposed to having a set risk to reward ratio of 1 to 2, 1 to 3. So if you like this video, be sure to hit like. If you want to see more content like this, be sure to hit subscribe and let me know down in the comments if it is you do want to see more content like this or want further explanation on this exact concept. Be sure to hit me up on Telegram if you want better clarification or information on how exactly I do what it is I do. Other than that, I hope that you have a very peaceful day and safe trading.